The Department for Work and Pensions has just announced something that every pensioner with a bank account needs to know about. And if you're receiving your state pension or any other benefits, the changes coming into effect from November 11th could affect how you manage your money and how the DWP verifies your payments going forward. Now, before anyone starts to worry, let me say straight away that this isn't about the government taking money out of your account or anything alarming like that, but it is about new rules that give the DWP additional powers to check bank accounts to make sure benefits are being paid correctly and to identify any errors or potential fraud in the system. What's happened is that Parliament has approved new regulations that allow the DWP to request information from banks and building societies about accounts that are receiving benefit payments, including the state pension, pension credit, attendance allowance, and other support that many of us rely on to get by each week. The government says this is all about protecting public money and making sure that those who genuinely need support are getting it, while also catching cases where people might be claiming benefits they're not entitled to or haven't updated their circumstances properly. For most honest pensioners who've worked hard all their lives and are simply claiming what they're owed, these checks shouldn't cause any problems at all. But it's still important to understand what's changing and what you might need to do to make sure everything's in order. The new rules mean that banks will be required to share certain information with the DWP when requested, and this could include checking whether the balance in your account matches up with what you declared about your savings if you're claiming means-tested benefits like pension credit. Now, pension credit is that top-up benefit that helps pensioners on lower incomes, and to qualify for it, you need to have savings and capital below a certain threshold, which is currently £16,000 for most people. If your savings go over that limit, it can affect your entitlement, and one of the things the DWP will be looking for is people who might have more in their accounts than they've told the department about. The same applies to other benefits where there are capital limits, and the idea is that these automated checks will help spot discrepancies much faster than the old system, which relied heavily on people reporting changes themselves or on random checks that could take years to uncover problems. What's really important to understand here is that this isn't a one-time thing where the DWP will look at your account once and then forget about it. These checks could happen regularly, and the technology being used will flag up unusual patterns or amounts that don't match what you've told them about your financial situation. For example, if you said you have minimal savings but your bank account regularly shows large deposits or a balance well above the threshold, that's going to raise questions. It's also worth knowing that these powers extend beyond just your current account where your pension gets paid into. The DWP can request information about savings accounts, ISAs, and even joint accounts if they think it's relevant to your claim. If you share an account with a partner or family member, that could potentially come under scrutiny too, although the rules do take into account that joint accounts might have contributions from more than one person. Now, I know some of you watching this might be thinking this sounds like an invasion of privacy, and that's a concern that many pensioners and campaigning groups have already raised with MPs. The argument from the government side is that benefit fraud costs the taxpayer billions every year, and with more people than ever claiming state pension and related benefits as our population ages, they need better tools to manage the system fairly. But critics say that most pensioners are completely honest and that these blanket checks could catch innocent people who've simply made mistakes or didn't realize they needed to report a change in their circumstances. There's also worry about how the technology will work in practice and whether it might wrongly flag up perfectly legitimate transactions as suspicious. If you've recently received a one-off payment like an inheritance, sold a property, or had money gifted to you by family members, that could potentially trigger a review even if it doesn't actually affect your benefit entitlement once properly explained. So what should you be doing right now to make sure you're not caught out by these new rules? The most important thing is to check that all the information you've given to the DWP about your finances is accurate and up to date. If your circumstances have changed since you first applied for pension credit or any other means-tested benefit, you're legally required to report that, and failing to do so could now be picked up much more quickly than before. If your savings have grown because you've been careful with your money or received a lump sum, and it takes you over the threshold, you need to let the DWP know even if it means your benefit might be reduced or stopped. It's far better to report changes yourself than to have the DWP discover them through these bank checks, because if they find unreported changes, you could be accused of fraud or asked to pay back money you weren't entitled to, and that's a stressful situation nobody wants to find themselves in. It's also a good time to review exactly what counts as savings and capital for benefit purposes, because there are some things that don't count or get ignored. Your home, if you own it, doesn't usually count as capital for pension credit purposes, and the first £10,000 of savings is completely disregarded when they calculate your entitlement. Between £10,000 and £16,000, You're treated as having income from those savings, which might reduce your pension credit but won't stop it entirely. Personal possessions, furniture, your car, and things like that don't count as capital either, but anything you might have stashed away in other accounts, premium bonds, stocks and shares, or property you own but don't live in will all be taken into consideration. If you're not sure whether something counts or not, it's worth getting advice from Age UK, Citizens Advice, or your local council's welfare rights team, because these rules can be complicated and it's easy to get confused, especially if you're dealing with them for the first time. For those of you who are only receiving the state pension and nothing else that's means tested, these bank checks are less of a concern because the state pension isn't based on how much you have in the bank. It's based on your national insurance record, and whether you've built up enough qualifying years through work or credits. The full new state pension is currently worth over £200 a week, and it's protected by the triple lock, which means it rises each year by whichever is highest out of inflation. Average earnings growth, or 2.5%. That's guaranteed income that won't be affected by these new bank monitoring rules. However, if you're receiving the state pension and also claiming pension credit on top because your income is still low, or if you get attendance allowance, housing benefit, or council tax support, then the bank checks could apply to those additional benefits. The timing of these changes, coming into effect mid-November, means they'll be in place well before Christmas, which is a time when many pensioners might see unusual activity in their accounts from family members sending money as gifts or from spending more than usual on presents and celebrations. If that's your situation, just keep records of what those transactions were for, because if the DWP does query anything, you'll be able to explain it clearly. The same goes for any regular payments you might receive from family members who help you out with bills or living costs. If your children or grandchildren contribute to your expenses, make sure you can show what that money is for and that it's not actually your own savings disguised as something else. One thing that might offer some reassurance is that the DWP has said these powers will be used proportionately and that they're not interested in penalizing people who've made genuine mistakes or who've been confused about the rules. There's supposed to be a process where if something unusual is flagged, you'll be contacted and given a chance to explain before any action is taken. That said, it's always better to be proactive rather than reactive when it comes to benefits, and making sure your information is correct now could save you a lot of stress later on. If you think there might be something on your record that's not quite right, or if you're unsure whether you should have reported something in the past, now is the time to contact the DWP and set it straight. They're generally more understanding if you come forward yourself rather than waiting for them to find a problem. Looking ahead, these bank checking powers are likely just the beginning of more sophisticated monitoring systems across the whole benefits system, and we can probably expect more changes and more technology being used to manage claims in the future. Some people see this as a sensible modernization that will help protect benefits for those who really need them, while others worry it's the start of a surveillance culture that treats every claimant as potentially dishonest until proven otherwise. Whatever your view, the reality is that these rules are now law, and pensioners need to adapt to this new landscape by being extra careful about keeping their information accurate and being willing to ask for help if they are not sure about something. If you've got experiences with the DWP or concerns about how these changes might affect you, I'd really encourage you to share your thoughts in the comments below, because hearing from other pensioners in similar situations can be incredibly helpful and reassuring. We're all navigating this together, and the more we share what we know and what we're going through, the better equipped we all are to handle whatever comes next. Keep an eye on any letters from the DWP, make sure they have your current contact details, and don't be afraid to seek advice if something doesn't make sense or if you receive a letter that worries you. The system can feel overwhelming sometimes, but there's always help available, and you deserve to claim everything you're entitled to with confidence and peace of mind. Stay informed, stay calm, and remember that we'll keep bringing you the latest updates on state pension, DWP changes, and everything else that matters to your financial security in retirement.